Hey guys, welcome into today's video, and let's not waste any time. So similar to the video I made on Friday where I was kind of noticing some rotation going on between some of the semiconductor names and into some of the SaaS plays, it looks like that trend is continuing here on Monday, and if anything it's getting more aggressive. Now, I'm not personally a trader, I'm more of a long-term investor, but I still like to pay attention to these things and just get a view on it. So if we're looking right now, if we go over to some of the larger semiconductors, if we look at Nvidia down 1.3%, AMD we're seeing down 0.73% on the day, Micron almost 6% down on the day. We look at SanDisk down 5.3%. A lot of these names that have been high flying in the past couple of months. And if you notice, so the sector that's been getting hit the most in the past couple of months and just has not been able to catch a break, being the SaaS stocks and the software stocks, we have some pretty big moves over here. So ServiceNow up on the day 8.7%, Adobe up 3.25%, and Salesforce up 3.44%, Intuit up 2.59%. So going through this, now me personally, when I'm looking at this, it does look like there's rotation. So for anybody who the way you want to think about this is a lot of these funds, whenever money's getting pulled out over here, whenever there's selling pressure on a stock and the stock is going down like this, especially ones with market caps as big as Nvidia and AMD, this is more than likely funds. This is funds selling out of it. It's a lot more selling pressure than there is buying pressure, essentially. And these funds that they get from selling out of these positions, they don't stay in cash. These investment funds are not going to stay in cash. They need to move it somewhere else, which is why you can sometimes see this, where you have this kind of convergence on the day where you see some of these sectors getting hit and other sectors getting some more inflows and being up on the day. Now, me personally, I'm just going to go ahead and pull this up. So for anyone who watched the video Friday, I said I was going to make a whole video where I'm comparing some different names I looked over the weekend and which ones I was starting a position in, which that video is still going to be coming out probably Thursday. I got some PTO, but just as a little sneak peek, these are the names I was comparing. And funny enough, ServiceNow, Salesforce was in them. And just to give y'all a little heads up for that video in the future, Celsius, ServiceNow, and CRM, I was buying all of them. But of course, the move is starting now that I'm finally starting a position. So, one of those things where kind of sucks because it's like I don't have my position built out at all. And I don't have enough cash flow to just rush into that. But it's not the end of the world. And these type of things happen in the market. You just got to stay disciplined and know what your valuation is, what you're willing to pay for it. And if it's under there, even if you might not be getting the best pricing, you just keep going in and just dollar cost average into that position. Again, I don't need to catch the bottom on every stock. If I think it's a good enough value, then I can keep buying it, which we'll get more into that valuation on that future video. But if we look at ServiceNow, so up 8.7% on the day, 2% in after hours. So this one, like I said, moving quite rapidly. Sucks I wasn't able to pick up more, but that's all right. I still have plenty of time. I don't think this is anywhere near fair value, just heads up anyways. And also, this is a thing you got to know in the market because you're always balancing your money of where stuff is going to be deployed. And speaking of some stocks that get lumped in with SaaS and software, what's another name that I've been talking about on my channel that I've been buying very aggressively the past couple of months and I built into an extremely large position? Well, you probably know it if you've watched any of my past videos, but Zeta I've been buying quite heavy. And if you can see, Zeta was up pretty big on the day as well, 11.6% and another 0.8% after hours. So, okay, we missed out on the move today in ServiceNow, but that's all right. We make up for it in other positions in the portfolio. Now, ServiceNow was kind of up on the back of, at least from the articles I was reading. It's people expecting an acceleration in earnings growth due to the agentic agents that ServiceNow deploys, which I do think that is a catalyst, but that was all the way in their earnings report. Like I was looking at this earning reports from a couple of weeks ago, and they were talking about this, and it's just funny. It's like now they start to look at it and actually bid it up, but whatever. Regardless, this is just my quick thesis on what or I guess a prediction of what I expect to happen or what I could see happening. So I think money's going to likely flow in from the looks of it. ServiceNow, Salesforce is going to be reporting their earnings in a few weeks from now. I'll double check the date on that. But anyways, I believe money's going to start flowing into ServiceNow due to that narrative where they believe the AI agents are going to start driving earnings growth, and the market's going to start viewing AI as a catalyst and a tailwind rather than a headwind, how it has been viewing it. That's going to transition into the same thing into Salesforce, which we see at a 3.44%. So not as much up, but still pretty decently on the day. Sorry about that. I'm getting over a cold. And so I believe it's first going to start with ServiceNow, where that's going to start to catch a bid as Salesforce produces their earnings. And from the last earnings, Salesforce has also been deploying a lot of AI agentic agents as well. I believe on their earnings, they're more than likely going to show signs of growth from that angle as well. Money's going to start to transfer in there as well. And Salesforce can start catching a bid as well. And I think one of the last ones it's probably going to pick up is Adobe. I do think it will also catch a bid, but I think Adobe will more than likely take a little longer than ServiceNow and Salesforce. But I think when Adobe reports, it's going to be more clear that they're actually able to accelerate their revenue growth as well as the net income, because although they may be losing licensing seats for their actual Adobe product because their customers and their enterprises are more efficient using those licenses, they're going to make up for that more, I should say, even more than what they're missing out on by the use of upcharging on those AI credits. This is something ServiceNow talked a lot on the earnings call that happened over the past couple of weeks, where ServiceNow talked a lot about now they have a hybrid model where they have their subscription service, but then also they charge basically for the uses. So the more tokens you're using, the more AI uses, they start charging you for that and the actual efficiency you're generating from that. Same thing I believe is going to happen with Adobe with the sale of their AI credits. And I believe that's going to drive revenue growth, and more than likely the market's going to start flipping on that. The market is and always has been very fickle. They're so easy to just kind of, if you pay attention, and especially in the past years, the market's so quick to jump from this company's dead or this sector is dead, this sector is no good, to, oh, this is now the next big thing. This is what we're transitioning into, and just completely doing a 180 on the narrative. And in my personal opinion, I think a lot of the SaaS, this is just Siri, of course. None of this I can prove, but I do feel like a lot of the SaaS sell-off hasn't been founded on actual fears of AI disruption. I really do think this was just something spread more so by Wall Street, and this was done for a lot of hedge funds that had short positions. And you can see the short activity on these stocks has been heavy in the past couple of months. And for anyone thinking that doesn't go on, there's literally a video of Jim Cramer you can search up on YouTube where he talks about this strategy where he'll sometimes, when he was running his fund, he'd put a short report out on a stock he wanted to buy. He'd already be shorting the stock. The short report would come out, cause the stock price to go down, so he's able to make money on his short position, and then he's able to buy long. So if you don't think they're not still doing that, come on. But regardless, I just wanted to get this quick video out there for everybody, and watch out for that video coming Thursday. That one should be a fun one.